Mola. And if this is your first time here, this channel is dedicated to helping you understand the market and trade with confidence. I have been trading over 17 years, training thousands of traders across the globe. And here we'll focus on real market analysis, practical strategies, and live trading sessions that help you stay ahead of the market. In today's video, I'm going to break down something many of you have been asking about, the Surfway indicator. I will show you two powerful strategies we use with this indicator to identify high probability trading opportunities in the market. So make sure you watch this video till the end, because this knowledge can significantly improve how you read or trade the market. Let's get into it. So this is the Surfway indicator. We have two types of the indicator. We have the basic indicator, which is this one. This is the basic indicator, right? And this is how the basic indicator actually looks like. So I'm actually going to turn on the basic indicators or properties for you to actually see. So this is how it actually looks like, right? This is it. We have here on the right side what we call the signal strength. Okay, so the signal strength shows up anytime we have strong signal. So currently the signal strength is pointing that price is going to the downside. Okay, so when you have, it's actually 7, that is from 1 minute to the daily time frame, it's 7. So when you have 4 or more in a particular direction, it means that you can trade in that direction. When you have 4 against 3 and there is a signal, there's a way we also deal with it. Okay, perfect. So always notice how the strategy or how the indicator works. The indicator is a non-reprint indicator. Non-reprint, meaning that it does not repaint at all. Repaint means that you have an arrow that appeared here, like this example. In this case, you have this arrow. If the arrow does not work, most indicators, they will disappear. Okay, but this indicator does not behave that way. It actually points out. It actually points out which trades worked and which trades did not. So the arrow will still be there. It will not disappear. It won't, and it must not. Okay, so it is a non-repaint indicator. That's basically what this indicator does. So all the arrows you are seeing on the chart, once they appear, they would not disappear. It's as simple like that. Okay, once they appear, they would not disappear again. They will be there. All right, so let's get into it. Let's get into it. So in fact, let me squeeze the chart a little bit. I squeeze the chart a little bit. So you see in this area, you would see that the arrows would appear and they may fail. It's fine. They fail sometimes, which is fine. All right, they fail sometimes, which is perfectly fine. It's okay for them to fail. Why they fail? Strategies do fail, okay, but why do they fail? This strategy is based, or this indicator is based on the trend. Is based on the trend. That is the idea of the indicator. The indicator base or its strength is the trend. That's the strength of the indicator. That's the strength of the indicator. The indicator actually works based on the trend. Okay? That's basically it. So, if you are using it in a corrective market or in a correction, you are not going to get the results. Those of you that have the indicator, sometimes will come and complain. Doc and this, doc and that. Indicators are not foolproof. They are not foolproof. Right? They are just helping you. It's not like the indicator has to do everything. No, that is not how they work. The indicator is helping you. This indicator has an accuracy of up to 98%. Those of you that have it knows what I'm talking about. All right. But then once you see the arrow, you see every arrow, you are trading it. No, that is not how it works. Okay, please, that is not how it works. So let me show you the features, and then I will start with the basic indicator. So I'm starting with the basic indicator. The basic indicator. So let's get into the basic indicator. And the weakness of this indicator is the range or corrections. That's the weakness. This is where it has a lot of problems. So when market is correcting, you can't use it unless you are either using the lazy man strategy or you are using the MolarGold zones. And we will look at the two strategies. So you can see it produced a buy here which failed, but produced two sells which actually worked out perfectly. All right, you can see that it really works. But when I'm using the basic indicator, I actually don't want to see this cloud. So I'm going to remove the cloud from the indicator. And you can also, if you have one, you can also turn yours off. So I'll turn it off. I don't want to see the clouds. I don't want them. And I rather like this moving average on the chart. Okay, perfect. Now let's see how it really works. So what happened is that I actually like, this is just using the indicator. I actually like picking or taking trades around this moving average, this one. So when the trades are around it, they have high possibility or high accuracy. All right. So let's assume this is it. It just entered. Then I will take the trade. So I'll take the trade right from the moving averages. What happens? Sometimes the arrow will come before price get to the moving average. When that happens, you can actually trade from the moving average. And this is what I do. I place one trade here, and one trade there. So I do it 3 times. Okay, very simple. Perfect. So sometimes it will just go in this way. It will just go in this way. And then I can still pick my trades because it's now above the moving average I'm actually using. So I like it that way. All right. So when it is above it is better. When it is on it is good. When it's below it is fair. Okay. Yeah. Just understand distance. Perfect. So you can see how the indicator actually plays out. Most of the time, when you see it around it, it really plays out perfectly. Okay, good. And you can see how price was misbehaving around the moving average, yet still it's delivered. So whenever you are using the basic indicator to trade, you always watch the signal strength. Inside the signal strength, Red means that it's selling, it's sell. Blue means that it's buying. Okay. At this point, the sellers are too strong for the buyers. Sellers have taken 6 of the slots, buyers are only taking 1 of the slots, meaning that the sell pressure is too strong. All right. So that's basically it. That's basically it. Okay. All right. So that's basically it. Let's get into it. You can see how they are playing around it. You can see how they are playing around it. Okay. You can see how they are playing around it. So the weakness of this indicator, I have stated, and I'm saying it again, is correction. When market is correcting. So when market is correcting, it may give you signals like this. All right. It does not mean that the indicator is not working. The indicator is working, and the indicator has its own weaknesses. So you have to identify the weaknesses. So it's not like you get the indicator and you just start trading every arrow. No, that's perfectly wrong. That's absolutely wrong. Okay? So please don't be don't be using the indicator that way. Somebody will just call me, Doc, the indicator is not really working. How is it not really working? I use this indicator, this same indicator, to call trades each and every single day for you guys. So how is it not working? Because you always using um, uh, all the arrows. Every arrow that prints, you are entering. Every arrow that prints, you are entering. No, that's not how it really works. Okay? So this is how the basic indicator work. Now let's get into two strategies that we use. Two strategies that we use. The first strategy I'm going to talk about is the lazy man. And in this case, I'm going to use the pro version of the indicator. So this is what we call the Surfway Pro. The Surfway Pro, you see, it has two different mechanisms. The signal strength is still the same, all right, but then we've added reversals. So it means that when you go on the 1 hour, you are going to see reversals on the chart. So you see there are reversals on the chart. When you go to 4 hour, you are going to see the same thing, but that is not the main purpose. The reversals is also for another thing. Maybe you want to see what is reversing on the higher time frame and all of that. That is fine. Okay, like I told you, this indicator is 100% non-reprint. 100%. It does not reprint. When the arrow appear, it will be there till Jesus Christ comes. It will still be there. It will not disappear. It will be there. All right, so I'm going to start with the lazy man. So inside the lazy man, all right, this strategy, we call it the lazy man. We have the sessions indicator. This sessions indicator is a free indicator in the App Store, okay, or in the market, the Forex market here. It's free. All right. So this indicator draws the sessions because the lazy man, as the name suggests, is laziness. You just want to come and enter the trade at specific time of the market and make money. Then you go and sleep. That's all. I think this platform is not giving me the actual time. Okay, I think it's correct. If not, then I may be late for some time, but I think it's correct. All right. So what does the lazy man do? The lazy man strategy is a time-based strategy. The lazy man strategy is a time-based strategy. So all you need to do is start the strategy at London. So in London, you can get one trade. London overlapping with New York, you can get one trade. And then in New York itself, you can get one trade. In Asia, you can get some trade, but I don't trade Asia because that time I will be sleeping. All right. So I'm going to explain to you, and then we are going to see how it actually works. So the first 45 or 1 hour to London open, and then the first 2 hours of London, so within 3 hours. But usually the strategy starts mostly early London. All right. So the first 2 hours of London, So if this is London, so you see, this trade actually appeared exactly at London opening. And then the trade happened, pack, and it went up. Let's find another one. London. So exactly at London open, you get your trade. So you first check your signal strength. What is the market saying? If at that time the market was pointing buy, then it means that you would make some small profit on this trade. But I am 100% certain that at that time the market was pointing sell. And in that case, you would be in the money. Let's take another option or another one. London open, and I said the first 2 hours of London, you see, and signal actually came up. This strategy is called the lazy man. So it's a time based. The first 2 hours of London, you position yourself, you sit down. Then you see the arrows printing. You take the trade around this moving average. Okay? And then price would play the rest. Very simple. The second one, you trade the overlap. That is London and New York. Within London and New York, most of the time, there is so much. And this one, I know how it really played out. London and New York gave a buy. All right. And I'll come to this type of buy very shortly. We'll call it the tap, send. All right. That's how we call it. So this is a tap, send. But this one would be, this arrow would be a tap reverse. All right. Then it then follows with tap, send. So it should strong. Then it happened again, tap, reverse. So it starts going to the downside. All right. I will show you when we are using the MolarGold zones. So this strategy, once you have the indicator, you just have to understand or memorize one or two things. That's all. When we have two bullish arrows like this, and then you have the flip, tap, reverse. So it reverses. Tap, send means that this one should be strong. It should go up. But it didn't go up and it started coming down. So it has reversed. So tap, reverse. And then it's going down again. So this is the next direction. Don't worry, you will understand properly. So this is basically it. And mind you, all of these, you can get it on the MolarGold bot. All right, you can get it. Either the strategy, the lazy man strategy, or the indicator. You can get both of them. All right, perfect. So that's basically it. Now we have tackled London. We have tackled London, New York, and then we'll tackle New York. So in New York also, you can get some trades here in New York. You can get some trades here in New York. Okay? Perfect. And then you can take it from there. So the same rules apply. You check your signal strength, you check the direction of the market, and then you trade. Very simple. The indicator does not stress you at all. Now, let's get into the pro version of the indicator. So, this indicator actually frustrates the charts. Those of you who have it, you will know what I'm talking about. This sessions indicator, it's not really that, so it actually frustrates the chart. So let's get to something. I'm going to turn on something. The pro version of the indicator is very simple. I've deleted the indicator. Good. The pro version of the indicator is very simple and it's very easy to use. So you can actually turn on something here, positions. Usually I turn it off. So let's turn it on to 3. By default, most of the time it's on 5. So let's turn it on to 5. Okay? And you can see this is using a default settings. It's pointing out the arrows and with target levels. This target levels is based on a mechanism in it. There are 2 types of them. All right? There are 2 types. The first one, it's been a while, so I'm going to find it a little bit because I don't use the Pro. The Pro actually is very, very heavy, right? I don't use the Pro. But those that use it knows exactly what I'm talking about. Good. So let's get into it. So the target levels, you can actually turn on. You can actually turn them on or you turn them off. Okay? You turn them on or you turn them off. All right? You can see it right there. Good. So what is happening inside here? We have the target 3. You can turn it off. You have target 2. You can turn it off. You have target 1. You can turn it off. Entry. You can turn it off. And it goes on. So what I'm going to do now is I'm going to turn entry and show entry zone. This is the areas I'm turning them on. All right. Oh, okay. I have to close this thing from here. Perfect. So I have to turn them on for you to see. Sometimes that indicator actually messes up the whole stuff. So let me do it again. So I'm going to turn on, okay, TP1, yeah. So let me turn on TP1 so that all of them will appear. Perfect. So you see, now you have your entry and you have your stop loss and all of that. So all of this area from this is the entry point because the arrow appeared here on this candle. Well, immediately this candle closed, that is when the arrow appeared. So it means that this is your entry and that red line is your stop loss. That red line is your stop loss, or that red area is your stop loss. So you can see it. Now, that means that this is your take profit. And I said the take profit, we have 2 types. All right? We have 2 types. So let's get into that. You can put it on default. You can put it on default and it will work perfectly fine. Okay? Or you can use different deviations and all of that. Okay? Perfect. So now, take profit 1. Let me change it to, let's say, 100 pips. So I'm changing it to 100 pips. So once you change it, it's actually going to change. Oh, it's actually going to change. It's actually going to change to 100 pips interval, right? So that it becomes a little bit bigger. Okay, let's get it. This indicator is very, very bulky, very, very big. Yeah. So sometimes all these things happen. Okay. Yeah, I think the one that we fixed all of this is there because I'm doing a video for this one. It was a rush. We fixed most all of these errors. And most of the time when these errors are appearing, it's because of the indicator I added earlier. It actually messes up the whole stuff. That is why I don't use that indicator anymore. Last time one of you was asking, Doc, I needed that sessions indicator, and I told you I don't use it anymore. Yeah, because it really messed up indicator. Okay, so let's get into it. You can actually turn on all of this. Yeah, so let me turn it on now. up to TP3, and now I'm going to increase. So this one is 350 pips, and this one is 510. Bingo. Now let me close from this side. Let me close from this side. And I should get it running smoothly. Yeah, perfect. So now this is basically how it looks like. This is how it looks like. Okay, perfect. So some of you be like, Doc, why do you keep squeezing your chart? I love squeezing charts. Yeah, it makes you see the direction clear. So good. So this is basically it. You see, that is the entry and all of that. And like I told you, placing your trade around this moving average is the best, right? Perfect. So now you see how it really works. Very simple. Very, very simple. So I've shown you how the pro indicator actually works and how beautiful it is. Okay, good. Now let's get into one more thing about this. Now I'm going to apply the second strategy. The second strategy is what we call the MolarGold zones, and that is what I've used to call trades for a long time. It's just recently that I started using the sniper, and I have stopped because of the volatility. I explained this severally. All right, when we had a lot of volatility on gold was moving crazily, and even till now the volatility has not died off. We still have a lot of volatility in gold does not move just crazy like this. Look at this, 600 pips on this trade alone. It does not move crazy like that. All right, so that is when I stopped using this very indicator. Okay, I stopped using this very indicator because the strategy I'm using, which is the MolarGold zones, that is the zones that I used to call the trades, and I'm going to explain it. All right, so in the MolarGold zones, we have the core principle of the indicator does not change. The signal strength does not change. So when the signal strength is 4 against 3, it means that you can trade in both directions of the arrows. All right, but be careful. If the arrow is under here for a sell, is correct. If the arrow is under this for a buy like this, and the signal strength is 4 against 3, and the arrow is under like this, don't go. Mostly it will result in a loss. The arrow must be above this beautiful moving average. If it's under like this, it will fail. All right, yeah, it will fail. So please take note of that. But the first rule is that we have to be 4 against 3. 4 against 3, that is where we can start everything from. So 4 against 3. So let's get into it. 4 against 3. So when you have 4 against 3, okay, it means that you are ready to take the trade. When you get your first arrow, so this is my first arrow. Let's start from here. So it's called the MolarGold zones. So we start from here. You are only going to place trade around here inside the zone. So 50 and 61.8 zone. You can only trade in 38 if you have 2 or more arrows. And in this case, you have 2 or more. So you can trade in 38. So you see, this creates a bigger zone for you. You have to trade from this area all the way to that area. All right? This is the zone strategy. So what happened? Then we have an arrow. This arrow means that this is what we call tap, tap, send. So it has to fly. But then we have another sell arrow. Remember, like I said, signal strength will guide you. If the signal strength is more, the buyers are more than the sellers, then it means that this arrow is likely to fail. So this arrow first will be a warning, we call it a warning arrow. Then you have tap, tap, send. Okay, so this tap, tap, send has now reversed, tap, tap, reverse. But this first arrow is a warning. This second one is tap, tap, send. It means that you have to be careful. Price can reverse anytime. And price did move, but then it reversed. Then it gave us another arrow. So tap, tap, reverse again, because this should be a tap, tap, send to the downside. And then now we are reversing. So tap, tap, reverse. All right, right here. So this is for the buyers. Then you take the buy. The buy did not go far, came back. What did you have? Tap, tap, reverse, because this was in the buy direction, so it's a reverse. Then you have another tap, tap, reverse. You see the way it's actually getting crazy? Yeah. So tap, tap, send, tap, tap, reverse, tap, tap, send, tap, tap, reverse. And this, what happened? Tap, 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 send. It didn't send. It went down. Then it gave you tap, tap, reverse. So you are going downwards. Right? And it started. So, like I said, now this is the last arrow. Okay, this is the last arrow. So let me make the chart bigger to explain. So like I said, here you measure. Don't worry, if you get an indicator, there are 2 sessions of it, and you would understand purely how they really work. So this is the first area you can actually be buying from, and you see that area really worked, so price moved. Then it came down. So this one failed. This is a failed trade. Okay, it went downwards. Failed trade. Okay, now this arrow should do something for us. It should retrace more than 50%. It didn't. So it means that we are starting the Fibonacci right from here all the way to the downside. And in this case, we can start trading from here. Tap, tap here. And like I told you guys, I love it when price is on this moving average on a cloud, right? And in this case, the cloud is somewhere here. So I would ignore this one and rather go for the cloud. And that is where it gets interesting. You get your first trade for the sellers. And what you do again, you start the Fibonacci right from here all the way to this side. 50 and 61.8. But you can only trade the 38 if you have 2 arrows. I stated that also. And you see 2 arrows. So this arrow is tradable close to the cloud. And this is perfect. Now, look at this. 50, it did not get to the 50. So this arrow is not tradable. So you have to extend the Fibonacci. 50 and 61.8, this is tradable. Tap, tap, send. And it did. And that's how we trade them. All right. And the Fibonacci levels we use for the target is very simple. So usually it's some people will be like, Doc, how do you determine your Fibonacci? I've explained this severally. We rejected the 61.8, so it means that 61.8 will be in the middle. That is right here. Then you put 1 above it and 1 below it. Then you add extra 1. So this gives you TP1, TP2, TP3, TP4. You can equally include TP5. And you are good. Right? This is basically it. And see how accurate it was? The trade actually came all the way to that target levels before making the next move. So this indicator is a very powerful indicator. All right? If you like it, yeah, you can chat the MolarGold bot and you can get your own as well. If you have any questions, you can leave it in the comment section. All right? You can leave it in the comment section. Okay. Guys, so this is that. There are so many stuff you can do with this indicator, and we have done so many of it. At this point, if you found this video helpful, make sure you like the video, subscribe to the channel, and turn on the notification bell so that you never miss out on our next breakdown. All right, you never miss out on our next breakdown or our live sessions. Also remember, the real analysis and trading opportunities are shared during our live sessions, so make sure you join us regularly. Thank you for watching. Keep learning, stay disciplined, and I will see you in the next session. Bye for now, guys.